Welcome to The Explainer, where we break down some pretty complex topics using expert analysis from our source material. Today, we are talking about a perfect storm that seems to be brewing in the gold market.
So, we're diving headfirst into this really fascinating scenario where you have these powerful, opposing global forces that could, just maybe, send gold prices absolutely soaring. We're talking about this incredible mix of economic policy, a little bit of geopolitical chaos, and a very specific investment idea. All right, so here's what we're going to cover. We'll start with this clash between two of the world's biggest banks. Then we'll look at the pretty bold prediction that comes out of that. After that, we'll talk strategy, and then wrap up with a look at the geopolitical situation and a warning about some near-term risks.
Okay, so it all starts with this core conflict, right? It's like a macroeconomic collision course between two of the world's most powerful central banks. And the experts we looked at are saying, look, the US Federal Reserve and the Bank of Japan, they basically have no choice but to go in completely opposite directions.
This is where it gets really interesting. You've got two giants being forced into totally different corners. On one hand, the Fed is looking at a potential recession and there's huge pressure on them to start cutting rates. But on the other hand, the Bank of Japan is fighting a totally different battle.
You see, Japan's super low rates have fueled this massive global thing called the carry trade. It's basically a flood of cheap money flowing out of Japan and into other assets. But here's the kicker. Their own inflation is going up, so they're being forced to raise their rates. And that threatens to unwind this whole trade, which could cause a seismic shift in money flows all around the globe.
So you might be asking, how does this big macroeconomic fight actually affect me as an investor? Well, this is where it leads directly to a very bold prediction for gold. This tension, this push and pull between these two big policies, it creates the perfect environment for a safe haven asset to just take off. So the number we're hearing from the analysts is somewhere between $5,300 and $5,400. And this isn't just the number they pulled out of a hat. The idea is that as the Fed starts to ease up, which could weaken the dollar, and Japan tightens, all that global capital is going to be looking for stability, something real, like gold.
And the key here is that this isn't something that's going to happen overnight. The sources are predicting the Fed will start cutting rates late next year, with the first quarter of 2026 being a huge trigger. And from there, it's just a steady drumbeat of rate cuts, and each one could be another push higher for gold.
Just a quick note. Please don't forget to subscribe to my channel, turn on the notification bell, share my videos, and like them. This is not investment advice. Thank you.
Okay, so with a forecast like that, you're probably wondering, how should I play this? Well, the experts in our source material are really clear on this one. This is not a market for trying to do short-term trades. Trying to time the tops and bottoms, that could be a recipe for disaster. And this quote from one of our sources just hits the nail on the head. In a market that has a really strong upward trend, if you sell just to grab a quick profit, you run the very real risk that the price just keeps on rising. And then you can't get back in without paying more. The danger of getting left on the sidelines is just huge.
So the big takeaway is to have this long-term mindset based on just patiently accumulating. One analyst even said, "What's bought is bought, don't look back." So the philosophy is pretty simple. Focus on the big picture, see any little dip in price as a buying opportunity, and just hold on for that bigger trend.
And if the economic fundamentals weren't enough, there's another powerful layer being added to gold's case: global instability. This isn't just about monetary policy anymore. It's about a world that, let's face it, feels increasingly chaotic.
I mean, just look at this landscape of global uncertainty. Each one of these hotspots is another potential shock to the system. And for investors, that makes traditional safe havens like gold not just a nice-to-have, but an essential part of a strategy.
And this is just gold playing its classic role, right? It's the ultimate defensive tool, the quintessential safe haven asset. It's like this bedrock of support for the price that exists no matter what the markets are doing day to day. It's a powerful backstop to this whole investment idea.
But before this potential rally really gets going, the sources are warning us about a period of pretty significant short-term risk, and we need to pay close attention, especially as we head into the big central bank meetings this December.
So as we get closer to these meetings, expect to see what one analyst called bird theatrics. I love that term. Basically, you'll hear one official say something and another will say the complete opposite. It's often done on purpose to create volatility and to keep the market on its toes.
The analysis suggests that while some of the more speculative assets like Bitcoin or stock indices might see a bit of a downturn ahead of the Fed's meeting, the fundamental strengths behind gold and silver should keep them well supported. The underlying story for precious metals just remains really strong, even if other things get a little turbulent.
So when you put it all together, this great monetary divergence, a clear strategy of accumulation, and this really chaotic global backdrop, it leaves us with a pretty powerful question. Are we watching the perfect storm for this ancient asset form right before our very eyes?